Ray Dalio is well known for being one of the best investors of the last 100 years. A multi-billionaire investor, he founded the world's largest hedge fund, Bridgewater, so clearly Ray knows a thing or two about investing. He recently spoke at the SALT conference where he gave his thoughts on the current environment for investors and where he thinks the best places are to invest right now. So in this video, we'll see some clips and my key takeaways from his speech, including the current environment and the big problem we're all facing right now, which asset classes to invest in and which ones to avoid. And we'll finish with his most recent thoughts on crypto, and stay tuned to the end as they ask the audience what they thought about crypto, and the results may definitely surprise you. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, to fully understand where we should be investing right now, it's important to understand the current environment and the biggest problem we are all facing. And who better to sum this up than one of the world's greatest investors, Ray Dalio. Ready? Let's do this.
I learned that when there is bad finances, and we have bad finances. Bad finances, I mean, if you're spending more than you're earning, and you have a balance sheet that has more liabilities than it has assets, that's bad finances. You can fill that in by printing of money and continue to create debt, but that's not sound finances. Central banks have the ability to do that, and when they do that, that's a problem. So when you have, let's say, bad finances, and by the way, that's happened repeatedly in history, we can see how that's worked and the consequences of it, and we have to understand the mechanics of it. So bad finances, when you have bad finances and you have large internal conflicts, that is a risky situation, particularly if you have a downturn, because the rich and the poor and so on, the left and the right, those with different ideologies have greater internal conflict. And the internal conflict has a risk politically, and it has a risk in terms of the effectiveness. When people are working well together to be productive, that's great. But if you have bad finances and you have large gaps, and you have the rise of a great power challenging an existing great power, and those things happen simultaneously, that's a risky set of circumstances.
So right now, the government has, as he calls it, bad finances. And that's the heart of the problem. And here's the thing. We all have a personal financial statement, whether individual or a major government, and it's made up of our income, expenses, our assets, and liabilities. And the problem is the US now has more debt than GDP. Income. Now, if this was anybody else, this would be the fast track to going bankrupt. However, if you can print the money, then you're kind of the exception to the rule. However, this is not a free lunch for everyone. Huge money printing has implications for everybody else. So, due to inflation, keeping money in the bank is a terrible idea. So, the big question is, where should we keep our money? Well, back to Ray Dalio.
But I also learned that dynamic that when you print money and create that's a hell of a stimulant, but it also means you don't want cash. It means that you want those other assets. So that dynamic is the nature of what we're going through. You don't want bonds. Cash is a financial asset. You don't want to connect cash. You don't want a bond. It's going to have a negative real return. Like, who wants bonds? You're going to have a negative real return. You want that? Okay. And you're not probably going to get the price appreciation through the bond. There are two ways you can make money. It goes up or it gives you a good yield. It's not going to give you a good yield, negative real yield, and it's not going to go up much more when you get down to that. So you don't want the bonds. Stocks have an asset. They're a reflation asset throughout history. So there are things that you want. You want stocks. You want gold. You want tangible assets. You want real estate. You want the things that are basically anti-money. And you particularly want those when there's a large portfolio of those, think about it right now through history. What we accumulate are a lot of financial assets. And the only purpose of those financial assets is to take those and convert them into buying things.
Yep.
And when there's a lot of financial assets and we produce a lot more financial assets, then they're all claims for those other things. And and if you just went through the calculations and you were to say, okay, how much financial assets do you have relative to real assets, or how much are there? There's too many relative to real assets. And so you want to get into those things that have more of those intrinsic values.
So you want financial assets, but not just any financial assets. You don't want cash. Cash is trash. You don't want bonds, as the real rate of bonds is now negative. You want stocks, you want property, you want gold and other tangible assets. But wait a minute, I hear you cry. He didn't mention anything about crypto, right? Well, luckily for us, the presenter also called him out on it. And this led to something pretty awesome. They asked the audience. Check this out.
You see
okay,
that
let me throw a new wrinkle in, which was not in any of the history, though. And I wonder, we can even ask this room, how many people in this room are holding some form of cryptocurrency right now? And I know you own some Bitcoin. How many? Actually, let's do that. How many people here have any cryptocurrency at all? What do you think that is? 80%? It's like a lot. Okay, so that crypto arguably wouldn't have been a tangible asset historically. Well, where does that fit in the realm of this?
Yeah, it's crypto is like a lot of historic currencies. There are some that have intrinsic value. It doesn't have intrinsic value, but it has a limited supply. And as long as it's accepted for payments and so on and has a limited supply, if the demand grows more than the supply grows, it goes up and it serves that purpose. And it's done a heck of a job of programming, stood the test of time, meaning it hasn't been hacked and so on. And so it's a viable alternative. And I think that most of the people, there are different reasons for owning it, but I think most of the people would say, is it a storehold of wealth that's limited in supply and maybe not controlled, and is it a viable alternative to a fiat currency?
Right.
I mean, don't trust the fiat currency. So how does it compare to the fiat currency? And so is it an alternative gold kind of thing? So there's probably an attraction in there, and it has an attraction for me in there. But then there's the question of it, and like how many in the audience? Let's ask the question: how many in the audience have some in gold? I'm curious.
Let's do that. How many people have some gold?
A lesser percent.
Lesser percent. I'm going to go 50% or less, 40 even maybe.
Yeah. So that becomes an interesting question. So, for me, I don't have a huge amount, but I have more gold than I have crypto.
Okay.
And so and my basic thing is, rather than make it crypto or rather than make it Bitcoin or the other, I would say diversification is a good thing.
Ray Dalio is one of the top investors of the last 100 years. A multi-billionaire, he founded the world's largest hedge fund, Bridgewater. He explains that governments are in a period of bad finances. The US now has an unprecedented amount of debt. In fact, US debt is now greater than GDP. This means they have no choice but to print an ever-increasing amount of money to service the debt. And this means we need to protect ourselves by buying financial assets. Cash is trash. Bonds give a real negative return, and he recommends stocks, property, gold, and gold alternatives like Bitcoin. And wasn't it interesting that at this financial conference, more people were investing in cryptocurrency than gold? And as Gen X and millennials take over from the baby boomers, I know which one I would rather buy too. And hint, it ain't made out of gold. So there you are, guys. Hope you enjoyed. Let me know what you think about Ray Dalio's suggestions below. For now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.